What if I told you that the most common piece of investing advice out there, buy low, sell high, is actually setting you up to fail? Well, today we're going to flip that old saying completely on its head. We are going to learn how to make the market's trend your best friend, your greatest ally.
Come on, we've all felt that pull, right? A stock you really like suddenly takes a nosedive and you think, yes, this is it. This is my chance to get in cheap. But let's be honest, trying to catch that falling knife, that's usually the start of a very, very painful lesson.
So let me tell you a quick story. This is Rahul. Now, Rahul's a smart guy, and he absolutely loves a bargain. You know, he's the type of person who buys his winter coats in May to get the best deal. And he takes that exact same logic and applies it to the stock market. He's always hunting for a discount.
He's had his eye on this big blue chip stock for a while. We'll call it Zorawar Power. It was trading at a pretty solid 500 rupees. A little too steep for him, so he put it on his watch list and decided, he'd wait for a better price. And then, boom, the market takes a hit, and Zorawar Power tumbles down to 400 rupees. Rahul's eyes just light up. A 20% discount on an amazing company? He thinks the market is totally overreacting. This is my moment to be a value investor. And so he buys in, feeling pretty confident that he's nailed the bottom.
But he hadn't. Not even close. That knife just kept on falling. By the end of the week, the stock is sitting at 300 rupees. Rahul's brilliant bargain buy just turned into a massive loss. He basically tried to stop a freight train with his bare hands.
Rahul's painful story gets us to a really crucial idea. Instead of trying to guess where a trend is going to stop and turn around, what if we just followed it? I mean, this one simple shift in thinking is the core philosophy of some of the most successful traders in the world.
Think about it like this. A strong market trend, up or down, is like a speeding bus. Trying to buy a stock that's crashing is like standing right in the middle of the road, holding your hand up, trying to stop that bus head on. You're going to get run over. The smarter move, the safer move, is to run alongside it, get up to speed, and then hop on for the ride.
This really requires a complete rewiring of your brain. We've all had buy low, sell high hammered into us since day one. But trend followers, they live by a totally different and, frankly, much more powerful rule. Buy high and sell even higher. See, you don't have to be the first person at the party. You just need to be there for the best part of it. So what is trend following exactly? Well, it is not about looking into a crystal ball. It's not about predicting anything. It's a purely reactive strategy. It's about looking at the market and saying, okay, the price is already moving up, so I'm going to assume that momentum continues. And then you just join the party.
Okay, so that all sounds pretty good in theory, right? But how do we actually see the trend? I mean, a daily price chart can look like total chaos, just jumping all over the place. We need a tool that can smooth out all that noise and show us what's really going on. And that tool is the moving average.
And hey, don't let the name scare you off. It sounds way more complicated than it is. It's incredibly simple. To get a 50-day moving average, you literally just add up the closing prices for the last 50 days, and then you divide that big number by 50. That's it. What you get is this nice, smooth line that shows you the average price over that time.
Now, the 200-day moving average, that's kind of the gold standard for seeing the really big long-term trend. You can think of it as a definitive line in the sand, a Lakshman Rekha, if you will. If the stock price is trading above that line, the bulls are in control. The main trend is up. If the price is below it, the bears are running the show. It's really that simple.
Okay, I know exactly what you're thinking right now. But wait a minute. Since it's an average of prices from the past, doesn't that mean the moving average is always going to be late to the party? It lags, right? And yeah, you're right, it does. It seems like a pretty big flaw, doesn't it?
Well, here's the secret. That lag, it's not a bug, my friend. It's a feature. It's actually what saves you. It acts like a filter, so it's intentionally ignoring all the small, meaningless one-day panics and pops. The line only really starts to turn when a genuine, sustained change in trend is happening. That lag is what keeps you on the bus for the whole trip, instead of jumping off at every little speed bump.
So now that we have this amazing tool, we can actually build it into a real, honest-to-goodness trading system. By using two moving averages, a fast one and a slow one, we can create crystal clear, objective signals for exactly when to get in and, just as importantly, when to get out.
And here is the dual moving average crossover system. It's beautiful in its simplicity. We use a short-term, fast line and a long-term, slow line. When that fast line crosses above the slow one, we call that a golden crossover. That's your signal to buy. And when the fast line crosses below the slow one, that's a death crossover, and that's your signal to sell. It's simple, it's mechanical, and there's no emotion involved.
Now, I gotta be real with you. This isn't a magic bullet. No system is perfect. In markets that aren't really going anywhere, they're just chopping sideways, this system can give you false signals. You'll get a buy signal, and then the price immediately falls, or a sell signal, and it rallies. We call those whipsaws. And you just have to accept those small losses. That's the price you pay to be in the game to catch the next huge, profitable trend.
Okay, so let's wrap this up and really boil it down to the most important ideas. This entire journey is about making a shift, moving away from the stressful, impossible game of prediction to the calm, disciplined art of simply following.
So here it is, your new trend-following checklist. Number 1, stop trying to catch falling knives. Your job is to buy strength, not weakness. So buy stocks that are already going up. 2, use moving averages to see the real trend and ignore all the distracting daily noise. 3, learn to love the lag. It's your friend. It's what keeps you in the big, profitable moves. And finally, number 4, use a simple mechanical system like a crossover to get clear, unemotional signals to buy and sell.
You see, following the trend is an unbelievably powerful strategy when the market has a clear direction. But that leaves us with one last, really big question, doesn't it? What on earth do you do when there is no trend? What happens when the market is just stuck, just bouncing back and forth between two prices like a pinball? Well, that is a completely different game with a completely different set of rules, and it's exactly what we're going to break down next time.